The question number 2016, question number 4, section 2, strategic management accounting, HNDA. Question: Golden Limited manufactured the product X and has the following sales forecast for the forthcoming 6 months of the next financial year. Given below a table, column month sales and closing finished goods of the month April to September. More production of 1 unit of X require for kilogram of raw material is expected to cost 37.5 rupees per kg. Skilled and unskilled labor are used at the rate of 3 and 5 hours per unit respectively. Variable manufacturing overhead is absorbed at the rate of 80 rupees per labor hour. Skilled and unskilled labor are paid at 120 rupees and 50 rupees per hour respectively. Fixed manufacturing overhead budget for a month is 460,000 rupees, of which 60,000 rupees is depreciation. Fixed selling, distribution and administration expenses are 200,000 rupees, of which 60,000 rupees is depreciation. Variable selling, distribution and administration cost is 25 rupees per unit. X is priced at variable manufacturing cost plus 20%, but in respect of cash sales, a discount of 10% is given, and 70% of X sales are for cash and the balance is on credit. Sale proceeds on credit sales are collected in the month of following that of sale. X inventory policy is maintained as at the end of each month 10% of raw material requirement of the following month. All purchases are settled in the month. Incurred cash balance as on 30 June is projected at 600,000 rupees. You are required to determine the selling price of X on cash and credit terms. Second, prepare the following budget for the month of July. Sales, production, raw material purchases, direct labor. Prepare the cash budget for the month of July. Let's see the answer. Determine the selling price of first one. Determine the selling price of X on cash and credit term. Let's see how do we solve this problem. Unit product per product X, and they given information in direct material. X requires 4 kg of raw material and expected cost is 37.5. So 1 kilogram cost is 37.5. We require 5 kilogram per 1 X. So 4 kilogram into 37.5. Direct material, we need 150 rupees for direct material per one product. Next, they say skilled and unskilled labor. Direct labor use rate of 3 and 5 hours per unit. Skilled 3 hours and unskilled 5 hours per unit. And variable manufacturing overhead absorb 80 labor hour, and skilled and unskilled labor paid 120 and 50 per hour. 120 for skilled and 50 is for unskilled. So get entire skilled 3 hours into 120, it is 360, and unskilled we need 5 hours into 50, it is 250. Next, they say variable manufacturing overhead at a rate of 80 per labor hour. The 80 per variable overhead, and how many hours? It is 3 plus 5, it is 8 hours total. Total 8 hours, 1 into 80 rupees, it is 640. Now we can get the total variable manufacturing cost. It is the 150 plus 360 plus 250 plus 640, it is 1400. What they say next. The price at variable manufacturing cost plus 20%, but in respect of cash sales they add 20% profit for the cost. How do we calculate the profit? The cost is 1400 into 20%. Okay, it is 280. So what is the discount? Yes. And excess for an assess a discount of 10% is cash sales discount, they give 10%. So this is the amount of credit. The 1400 plus 280 profit, we can get the price of X for credit. It is 1680. Is it we give the we sell for cash, they give 10%. So how do we get the price? The discounts 10%. So 100 minus 10, it is 90%. The price 1680 into 90%, it is 1512. Next they request prepare following budget. A sales budget. So how do we prepare the sales budget? First one, sales unit, and April to September sales budget, month April to September. And next one, sales unit, and rate 8000 to 10,500. Likewise, right. Next, now we can calculate the cash sales. How do we get the cash sales? The sales amount is on cash basis, it is 1512. So and 70 of the sales are for cash. It is 70% from sales for cash, and balance is on credit. So our credit price is 1512 and credit price is 1600. Now we know our cash sales is 1512 and our sales percentage on cash is 70%. So how do we get the cash sales amount? The 8000 into price 1512 into 70% amount. Likewise get the other value. The 8100 into 1512 into 7%. Likewise get the other value. Next on credit sales. Our credit sales price is 1680 and our rest of all sales are on credit. It is 100% minus 7%, it is 30%. So how do we get the April? 8000 our sales unit into sales price, it is 1680 into 30% our unit percentage. We can get the answer. Likewise get the other value. Now we can get the sales revenue for the each month. How do we get the total? The 70% plus 30%, it is total sales. Likewise get the other value. Section B, production budget for the month of July. First one says month April to September, and sales unit dimension in the table 8,000 to 10,500, and next they give the closing finished good of month 800 to 1050. We need to add this closing stock because they maintain 800. They maintain closing stock for the each month. So we need to add this closing stock, and the closing stock in next month it will be the opening stock. The April closing stock will be opening stock in the month of May. So this opening stock we need to minus or less. So we need to product unit the 8,100 plus 810 minus 800, it is 8,110 unit we need to produce in month of May. Likewise get the other value. Section C, raw material purchases. In production budget we find out the unit. Let's enter the unit month April to September, and sales unit we find out in production budget, and we need 4 kilogram of raw material for one product. So 4 into relevant sales unit in May, 4 into 8,110, it is 32,440. Likewise the raw material for multiply into sales unit of relevant month. Next they say they maintain 10% of raw material requirement of the following month. The closing inventory 10%, we need to add the following month requirement into 10%. In this case April, we need 32,440 raw material, it into 10% it is 3,244. Likewise following month raw material requirement into 10%. Likewise with other month of the closing inventory, and next opening inventory. The previous month closing inventory will be opening inventory of the next month. The April closing inventory 3,244 will be opening stock in month of May. It is 3,244. Likewise get the other value, and raw material to be purchased, the total value of the raw material. The May raw material 32,440 plus 3,284 minus the opening inventory 3,244. It is 32,480. Likewise get the amount. Now we can find the raw material cost. The raw material 1 kg is 37.5 rupees. So 37.5 rupees into the relevant amount of kilo raw material, we can find the cost of relevant month. In this case in May, 37.5 into 32,480, it is 1,218,000. Likewise get the value. So this is the raw material purchase budget. Direct labor budget. Let's see, start a month April to September, and sales unit. Now we know we enter that for a relevant month. And next, skilled labor hours. We need in this sentence is mentioned skilled and unskilled labor are used at the rate of 3 and 5 hours per unit. The skilled 3 hours and unskilled labor hour we need 5 hours. Let's copy that. And skilled and unskilled labor hours are paid at 120 and 50 rupees. Skilled labor hour, skilled 1 hour, it is 120 rupees, and unskilled labor hour cost is 50 rupees. Can answer. Skilled labor hour we need 3 hours, so 3 hours into we need 3 hours for 1 unit, so we need to produce 8110 units, so 801,010 unit into skilled requirement, skilled labor requirement, it is 3 hours. 3 hours into 8110, it is 24,330. So likewise 3 hours into sales unit, we can get the skilled labor hours requirement. Now we know the skilled labor hour cost is at 120 rupees, so 120 rupees into relevant skilled labor hours, we can get the skilled labor hour cost. The first one, skilled labor hour is 24,330 into 120 rupees, we can get the cost of skilled labor hour of May. Likewise get the other value. Next, we know unskilled labor hours, we need 5 hours per unit, so 5 hours per unit, 5 hours into relevant unit, we can get the hours requirement. So in this case 5 hours into 8,110 units, it is we need 40,550 units. Likewise get the other value. And now we know unskilled labor cost is 50 rupees per hour, so 50 rupees into hours, it is we can get the cost of unskilled labor, it is 40,550 into 50%, sorry, rupees 50, it is 202,750. Likewise get the other value. So this is the direct labor budget. Right. Next they ask prepare the cash budget for the month of July. Let's see how do we prepare the cash budget. So let's turn cash sales of July in here it mentioned, and next on debtor collection of July. The credit sales of June, we get the debtor collection of July, and we can get the total of the amount cash sales and debtor collection. It is total receipt. Payment suppliers, it is in raw material purchase budget, it is in here mentioned. And skilled labor hours, it is in direct labor budget and July, and plus unskilled labor cost. And overhead mentioned in the question, it is 460 of the which overhead amount 460 of which 60,000 is depreciation, so 460 minus 60,000, it is 400,000. And selling and distribution, how do we get selling and distribution? The 200,000 of which is 60,000 is depreciation, so 200,000 minus 60,000, we can enter 140,000 selling and distribution. So variable cost mentioned here. Variable selling, distribution and admission cost is 25 rupees per unit, so 25 rupees 600,000. So now we can get the total payment. This all of total payment. So total receipt minus total payment, we can get the net cash increase. So now we can add the net cash increase to opening cash. Opening cash is projected at 600,000. So net cash plus 600,000, ending cash balance get 662 and 6,980.